Hello and welcome to Manny Making Me Money. So let's talk about the stock market. Actually, hold on, I got a better intro. Check this one out. Hello, beautiful people. Hold on, fix it. Hello, beautiful people. Welcome to my channel, Manny Making Me Money. Okay, so let's decipher what the U.S. stock market really means. And what it is these two major exchanges, which is the NYSE, which is the New York Stock Exchange, and the Nasdaq. And out of those, there's these three major indexes that you probably see a lot in the news, like the Dow Jones, S&P 500, and the Nasdaq Composite. When you refer to the stock market, you're referring to these exchanges and indexes, and they're pretty much just a conglomerate of the whole U.S. stock market and major global stock market put into these indexes. And yeah, that's pretty much what the U.S. stock market. And each one has different types of stocks, so let's get to know them. Okay, so the Dow Jones is comprised of 30 blue chip companies, and blue chip companies are stable, profitable, and long-lasting companies that are relatively safe investments. And these index cover 30 of the best companies, like I said, and here's a look at some of them. Very good companies, been established for a very long time. Okay, now the S&P 500 is the top 500 stocks here in America, and pretty much these are all of them, and these are all voted in by a council or board, you could say. It's a better way of saying it. AT&T's in there, Autodesk, AutoZone, and this is where most people's retirement accounts are like tied in. Like if you have a 401k, you're probably like heavily invested in the S&P 500. And yeah, take a look at these companies. They have, their index has been going up almost every year per average. So pretty good, pretty solid. See Chevron in there, Citigroup, Clorox, Comcast. Yep, take a look at all these. All right, so now let's talk about the Nasdaq. And the Nasdaq index is comprised of 100 stocks, and they're mainly in the technology sector, interrelated companies, but there's a couple financial and consumer companies, biotech and industrial companies as well. And here, let's take a look at some intel. JD.com, Marriott Hotels, Microsoft, PayPal, Tesla. This index has some of the most innovation companies out there. I really like this index out of all of them. I feel like they got most of the futuristic companies, and I feel like this index is going to do really good in the future. Okay, so now that you know about the stock market and the three indexes, the next step, if you want to get into the stock market, you have to start an investment account, which means you have to start a brokerage account. And there's three that I recommend, and you probably heard about this one. It's called Robinhood. It's very easy, smart. I think it's probably the most easiest one to start off with. Then Webull. Webull's a kind of a pretty much the same as Robinhood, just like on steroids. Pretty much better for day trading. And then the third one is M1 Finance. Those are the three ones I pretty much recommend. The best ones I'll say is Robinhood and M1 Finance and Webull. Honestly, those three are perfect. And pretty much these brokerages want you to sign up, and you get a free stock when you sign up, and the link's down in the description. And it's pretty much a great way to start investing. You start with a free stock, and it's pretty good. And with Webull, you could start with 2 free stocks if you deposit $100 within like the first 24 hours. And you could easily take that money out and keep the 2 stocks. So pretty good deal. Okay, so if you want to invest in the S&P 500, here is a stock. It's an ETF, and the ticker symbol is VOO. And this one tracks the S&P 500. And the Nasdaq, here's one. It's QQQ, and then the Dow Jones, DIA. And that pretty much sums up the whole video. So like and subscribe if you like this, and I'll keep continue making videos like this. People kept asking me about the stock market, so I just made this quick video. Yeah, like and subscribe. Get big. My biceps getting bigger. Make sure you do your digital research, because some of these ETFs, there's an expense ratio, which means like they just take a little bit of, like, they take a very small percentage that's less than 1%. Although Fidelity has them 0.1, so look into those. And that's about it. Invest at your own risk. Don't just take my word. Make sure you do a little bit of research before you invest in this. But definitely sign up for Robinhood and Webull and M1 Finance. You get free money, free stocks just by signing up. Like, companies want you to succeed and they want you to make money. And yeah, let's take it off from there.